Okay, everyone, it's 5 minutes into our time. I think we've waited for like a few people to come in, and we have up to 19 on board, so we can kickstart. Okay, like I mentioned earlier, if I know this is majorly for business owners, so you can indicate in the chat box what your business is, what you do, what service are you offering, so that every other person can like know what it is you are offering and try to patronize. Thanks again, guys, for joining us on this webinar. And for the sake of those that are not aware of 𝗕𝗂𝘃𝗶𝗴 is a billing to payment software that enables businesses to pay and get paid on time and helps to keep business cash flow positive. So 𝗕𝗂𝘃𝗃 helps with invoicing, automations, reconciliations, and payment processes. So just to make life easier for you as a business owner. And I'm sure we all know why we are gathered today. We're gathered to speak on navigating economic volatility. So what you might want to ask, what I mean, I know everybody should know what economic volatility means for. It refers to like the unpredictable and rapid changes we experience in economy, and it can also be characterized by fluctuations in economic indicators like GDP growth, inflation rates, and currency value, as well as market conditions. So these changes are like sometimes triggered by global economic events like pandemic, wars, or trade distribution, and policy changes in like interest rates, tax reforms, and all of those things. And for businesses, these things can like curse unstable cash flow, change in consumer behavior, rising costs, and difficulty in accessing credit. So, because of this, we have invited two financial experts to guide us on this, helping us navigate all of these economic challenges in the best possible way. The first is we have 𝗕𝗂𝘃𝗶𝗴 of InterSwitch. He's a financial controller at an African-oriented technology-driven company, which you all know as InterSwitch. He has about 14 years of strategic experience spanning consulting, insurance, and the fintech sector. He leads financial governance across multiple entities. So, Chris, you can just unmute your mic to just say a few words about yourself, as I've said.
Okay, thank you, 𝗕𝗂𝘃𝗶𝗴, and good afternoon, everyone. Thank you for joining, and it's a pleasure to be here today to speak on the topic.
Yeah, we're glad to have you here. And then we also have the second speaker, Oyekemi Ajayi. She's a manager at 𝗕𝗂𝘃𝗶𝗴, which is a leading global accounting firm with presence in over like 150 countries. Oyekemi has 10 years plus experience spanning investment banking, financial advisory, and corporate finance and consulting. Please, you can just unmute to just say a few words about yourself.
Thank you very much. Thanks for having me. Thank you, and welcome everyone to this webinar. I'm sure by the end of this webinar, we would have something to go home with. We would be well equipped, and then we would have gotten insights as to how a business can navigate these present times in our economy. Thank you.
Yes, thank you so much. So to continue to open this discussion, I would be asking a question to both speakers, starting from Chris, then Oyekemi will give our opinion. So my first question is, how do you think businesses can optimize their cash flow during periods of uncertainty? So can I hear from Chris what he has to say about that?
Okay, thank you very much, 𝗕𝗂𝘃𝗶𝗴, and good afternoon once more. It's important to have this conversation. First, to even understand what cash flow is. I mean, this is the money in and out of a business. Some businesses run on a cash flow positive position. Some run on a cash flow negative position. It's important to know that it is dangerous, to consistently be in a cash flow negative position. So, as a business, what are the things that you need to do to to ensure that you correctly or competently monitor your cash flow position such that you are able to navigate uncertain business environments. First of all, Nigeria is currently undergoing some peculiar challenges, I would say, because when you look at the fuel price, it's gone up significantly between last year and this year. You also look at inflation numbers, we are over 33%, 33.8%. Then you also the recent increase in the monetary policy rates. Obviously, that will translate into higher interest rates by banks. So as businesses, first of all, with all of these impacts that we see and the kind of environment we operate in, what do you need to do? And that's, in my opinion, probably list a couple of things that would help as businesses to manage our cash flow position. So first is you want to know where you stand. The information you're working with, is it accurate, right? In terms of monitoring your cash flow position, do you have accurate reporting that would help guide you in decision making? So as you monitor your cash flow positions, are you making decisions off the right numbers? Now, you also want to look at your working capital, and typically, and what will be applicable to a number of us here is managing our accounts payable and accounts receivables position. So when you have payments that you're expecting from customers, which forms your accounts receivables, how well are you able to manage it? What kind of conditions have you put in place to ensure that you receive funds in as quickly as possible? And in terms of payments, because the whole idea is, as much as possible, keep money within the company. So in terms of payments, which forms your accounts payable, you need to begin to take immediate steps, negotiating with suppliers, negotiating with vendors that you need to pay with. So you need to get better negotiation terms. You need to also ensure that you control your operating costs. So these are uncertain times. These are situations whereby if we're not very careful about our cost profile, if we don't ensure that we spend on things that are necessary, right, at this point in time, and as much as possible optimize the costs that we incur as a business, we stand the risk of running into a negative cash flow position. I would end it here, at least for now, so that my colleague can also speak on other areas that would help as a business, would help to improve your cash flow position.
All right. Thank you so much for that insight. I'm sure that everyone had something to get from there. So we'll have Oyekemi speak on our own opinion concerning this as well.
All right, thank you very much, Gwemisola, and thank you, Chris. You've done a very good job by talking about working capital, payments, receivables, and all that. But looking at this question, I think for me, I would touch a little on I would start from where Chris has stopped. Let's put it that way. I've coined out an acronym called 2MS on how a company can actually optimize its own cash flows. And one is on maximizing available cash. The next M is on minimizing cash shortages. And the last one is on streamlining your cash flow processes. So just to touch briefly on it, the points that my colleague has mentioned, I'm not going to say much on that. I'm not going to say anything on that rather. So the first is on maximizing your cash flows. And how do you do that? Recall that if you're not able to maximize your cash, you won't be able to meet up with your obligations. You won't be able to respond to uncertain expenses or on events that just come up that you're not even planning for. You won't be able to, meet up with those things. Now, how do you maximize the cash flows is a question. I will talk about diversifying your product or your service offerings such that you can offer services, maybe value-based services now to customers at the lower end spectrum. So let's assume you have different categories of customers. So maybe customers that are on the upper end, that if you charge them, for example, 200,000, just an example, they are ready to pay without even negotiating so much with you. You can also tailor a product or service for customers that, oh, if you go to them with a 50,000 bill, they are, oh, this amount, I can't meet up with your 200K. So, but if you go with them with, if you go to them with a 200, if you go to them with a 50,000 bill, pardon me, they are ready to take that service. So what I'm saying in essence is you diversify. Diversify can be in terms of creating a value-based product for your customers, more like segregating your customers. The upper end, you channel your 200K products to them. The guys at the lower spectrum, you channel still value products, but at a lower amount. Another thing you can do is also extend your products, more like have product extensions or service extensions, right? That could also help you to be able to generate more, because all these things we are saying about cash flows, if you don't have cash itself, if you're not able to generate cash, you won't be able to talk about managing the cash flows in the first instance, right? Another thing you need to do to help you to maximize your cash is to leverage on targeted digital marketing. I think a lot of us have not really optimized digital marketing as much as possible. So if you're able to do that, create more awareness of your products, at the end of the day, it would help you to increase your inflows or your revenue, as the case may be. Another thing which my colleague touched on was improving sales collection. But where I want to come in here is that I've seen a lot of businesses whereby someone goes in there and says, I want to make payments, but I don't have cash. Can I use your POS? Yes, they have a POS, but there's only one POS, and you have a lot of customers on the queue. That is already, downtime, because I have to spend maybe 5 minutes or 10 minutes just to be able to make payment for that particular item. For some, if you can look at filling stations as a good example, you go in there, there's a lot of queue. When you get to the payment, when you get to the what they call them now, where you're going to get before the attendant, you see that what is causing the issue is the fact that it's just one POS, or the POS that is available is not working. So for you to be able to, maximize collections in your business, have various options that your customers can explore. There's cash option, you can use POS, you can do a bank transfer, just have various options for your customers so that you can boost your sales. Another point again that I'll just touch on, in line with what my colleague mentioned on receivables, is your invoice. Have a timeline for your invoicing and how you sort of track invoicing and how it is sent to your customers and how your bills are collected. Because of time, I'm just going to touch on the other ones, which is on minimizing cash shortages. Cash shortages, yes, we know that there's downtime, no doubt, right? We know that if you are short of cash, you cannot meet up with your payments, yes. But what are the things that you need to do to help you in this period or to minimize this? The first one is on insurance. A lot of us, yes, we are Christians. Oh, I'm covered with the blood of Jesus. No evil shall befall me. I'm protected. Yes, we understand that. But sometimes taking an insurance policy actually saves you. I've benefited from insurance. I mean, there was a time my car was involved in a very bad accident and it was a write-off. And thankfully, I had a comprehensive insurance on the table, and I was able to get, funds from my insurance company, and then I added to it to buy something else. If I didn't have an insurance cover, if I didn't have a comprehensive insurance, you know what, you know how much cars are and all that, I would have, felt the heat. So having an insurance cover helps. For businesses, having an insurance on your products, it helps a lot. So have a good insurance company that you can, engage and see what cover you can get. Another way you can help to minimize shortages in your business is by improving your cash flow management system. My colleague touched on this when we talked about working capital. So ensure that you have a good inventory system in place. He talked about payables, ensure that you negotiate good terms. That would help you to reduce shortages. And then the final one is on streamlining your processes, more like any process that is repetitive in nature. as much as possible, try to automate them, because the time it will take you, time is money. The time it will take you to do, let's say it takes you like 3 hours to do a particular task. If you're able to minimize it or optimize, rather, if you're able to automate your system such that you spend 1 hour doing that task, it helps you. Let's take it a step backward. If, for instance, to produce something, it takes you 6 days to make a product, if you're able to automate your system such that it takes you 2 days to produce, so that means that you can actually get 3 runs in 6 days, and at the end of the day, you'll be able to make more money. So when you think about it differently, it will help you to optimize your cash flow within the business, or yeah, in the economy. Thank you. I hope I haven't taken so much time, Grimsala.
No, you didn't take so much time. I mean, you touched all the great things that, I mean, businesses should actually pay attention to. And some of these things are some of the services that we offer at 𝗕𝗿𝗁. So it's a great deal that you have shared the best methods for them to navigate these times. I mean, to optimize their cash flow so that they are prepared on time and they don't encounter anything that takes them by surprise. So now moving on to our next discussion, I would asking Chris this question. I mean, they are common. There are several challenges that causes businesses to collapse and all. So I'll ask Chris, what are the common? We're asking what are the common financial pitfalls that businesses face during? I mean, there are so many of them. So what are they that businesses face during recession, and how can they be avoided? What do you think is the best thing that put them in preparation to avoid this recession? I know we've touched some of it in your cash flow discussion, but you can streamline to this.
Yes. Thank you for the question. I think it's a very important question. I mean, businesses operating in Nigeria are not immune to the macroeconomic factors that we experience. I mean, recession might sound like an extreme, but if you look at it, technically, you don't need to be in a recession for, as a business, for you to respond to certain challenges. So in highlighting the financial pitfalls or the pitfalls that businesses might experience, it's important to, note that when we address these challenges as a business, it's like a strife, or it's like a battle for survival. The economic conditions are pretty harsh at this point in time. Like I mentioned earlier, when you have situations where inflation is on the rise, unemployment is on the rise, you have, limited disposable income, definitely it would impact on your operations as a business, because people would have lesser funds to patronize you as a business. So what do you do to respond to a situation like this? Practically, you need to then position yourself in a way that you are able to provide or give value to your customers. And I've seen cases, right, where in people trying to give value, you see that their operational cost is still high. Maybe you have to run your diesel for, the longer period just to ensure that there is power supply. And in doing that, you're spending more. And in some cases, some businesses, in the bid to cut costs, may not have approached it in the right way, and they are cutting costs in a way that would, impact on their customer service. Perhaps you had 5, 10 customer service representatives before now, and then in trying to cut costs, you are reducing the number to 2, knowing fully well that, 2 customer service representatives would not be enough to service the amount of complaints you get on a daily. So it's important that when we are minimizing costs within this situation that we find ourselves, and in trying to ensure that the business is more profitable, we should pay attention to the fact that there are certain things that we might do that will be detrimental, to the business as a whole. So that's putting that one aside. We should also notice that, or we should also ensure that, some of those fixed costs that we have in the business, we need to revisit it. So it's really more about ensuring that where there are places where, the potential wastages, we need to review them all over. And like I mentioned earlier, it's not really about minimizing the cost, but it's about optimizing it, getting to that point where you would say this cost is sufficient to provide this service, or this cost is what I need as a business to ensure that I am able to deliver the service. Because when we find ourselves in a situation where customers' disposable income has gone down, customers then begin to look for value. So you have options of, going for the price wars, but trust me, as a small scale business, depending on the size of the business you operate, there's a limit to which you can engage in such wars with other businesses, especially if, other businesses are benefiting from economics of scale and they are able to produce things at a cheaper, cost. So what then differentiates you as a business? That is where you need to then focus on driving value. If it's the customer service, if it's the value you provide by the products you offer or the service you deliver, then you need to focus on that so that people come to you not because they want to patronize you psychologically, but because they know that when they come to you, they get value. So in surviving a situation where there's a lot of negative metrics, or you have declining metrics within the macroeconomic environment, and it is impacting on the purchasing power of your customers, to survive in such scenario, my first and best advice would be that you differentiate yourself in terms of the value you provide, knowing fully well that your service may be cut off, or customers may not patronize you because they don't have the funds to patronize you, maybe not as much as they used to. So, I mean, that's one of the areas I would like to highlight.
All right. Thank you so much for all you've listed. I really hope that everyone is having to learn from all that Chris has said. And for the sake of those that are just joining us, I said earlier that if you are a business owner, you should list your business indicate your business in the chat box. Let us all know what your services you are offering and all of that, so others also get to see, and in turn, who knows, patronize. So moving forward on to the next discussion, which is question which is for Oyekemi. So your question is, how can businesses make informed financial decisions to thrive in a competitive and unfavorable economy? So let's hear what you have to say on that.
All right, thanks for your question. So really, what's making an informed decision, or what is an informed decision? Really, the way I view it, informed decision is largely a decision that is based on data and that is well thought about, is driven by your financial, your operational data, and you've also thought about your risk and all forms of opportunities that are on the table effectively. So as a business, before you make a decision, there are certain things that we need to be abreast of because they impact the business. First is around, before I even go into that, I'll start with the mindset, because we understand that the economy, the way it is, inflation rate is going up, interest rate as well is going up. But I think having a mindset that even with the way things are going up, you can still create value. Having that mindset that you can still thrive as a business, I think is the very first step. A lot of entrepreneurs are known to be go-getters, and a lot of them have very high ambition. But that high ambition, the mindset of a value creator, And all these things I'm about to say now, we're going to tie everything together to help a business make an informed decision. So the first thing as a business is that you need to understand key indicators and how they affect your business. I think emphasizing on the word how they affect your business matters a lot. The next point I'm going to focus on is on policies, because a lot of businesses just make decisions without looking at the overall impact. For instance, there's a new government now in the United States. We all know that Trump won the election. What are the policies that Trump has put on the table that one way or the other would affect your industry of focus or will affect us here in Nigeria? In what way? You know, all these things too sort of add up, because there can be a policy that might just impact your activities, you know, going forward or in the near term. So it's good for you to be informed, to stay informed about all these things. The next point I'm going to talk about is on getting relevant information, financial information on that decision or that goal that you want to achieve. So you need to be able to look at the market trends. Okay, this is my industry. I'm in the manufacturing sector. Okay, I want to maybe bring in a particular machinery, or I want to be exporting some of the products that I produce. What are the policies around it? Who are the stakeholders involved? What's the market trend? Okay, in this sector now, these are my competitors. These my competitors, have they been exporting? Okay, how are they going about it? Gathering all those information would be very helpful before you make that decision. Another point again is on technology. And here I'm talking about technology because it's not just the use of computer softwares and all that, but bringing in your data analytics would be very insightful, because you need to understand even your customer trends, your consumer behaviors. What are the efficiency requirements for you to be able to achieve that objective that you are set to you know, achieve? All those things to form a factor or play a lot when you want to make a decision. Another point you should also look out for is the cost implication. Okay, like I mentioned, I want to export. What are the requirements? What will be the cost implication? How do I get the inputs? These things that I want to export, am I producing it myself, or is it just packaging I'm going to do and I'm going to get all the inputs from various sources? All those things together form part of your cost implication. What are the risks involved and how are you looking to mitigate those risks? They all form part of the decision-making tree. And then the next one again is the relationships, the stakeholder relationships in that area. So when you're looking at stakeholder relationships, you look at your customers, you look at your suppliers, you look at, you know, the government, you look at even your bankers too. They all form part of that stakeholder relationship. Another point again is now looking at the financial impact on your business. If, for instance, you want to bring in a capital expenditure, how much is it? Where are you bringing it from? What is going to be the implication? How do you finance it? And I know there's a lot of questions that a lot of people ask. What are the sources of finance or the options of financing that are available for a business? So everything together that I've mentioned, in summary, I talked about the mindset. I talked about the fact that you have an objective that you want to achieve, the drive to help you achieve them. But most importantly, taking a step back and understanding economic indicators and how they impact your business, understanding the policies around that decision or that activity that you're looking to do, gathering information on what the financial implication would be, how you will fund it, the alternatives available for you to use to fund it, the data that is also driving that particular objective. Data maybe with respect to customers, with respect to the market, with respect to, you know, operations within your business. And then finally, I talked about the risk and how you intend to mitigate all these risks. I also mentioned stakeholder relationship and also analyzing the financial impact or the financial performance of your business. I believe that when you apply all this together, you would be able to make an informed decision as a business.
Oh, all right. Thank you so much for that insight. And it's one thing to actually have a mindset to grow, and you're not actually informed about the things you should pay attention, like the risk involved, like policies. I know a lot of people are not even aware of most policies. They just jump into the business and they intend to learn on the job, but by the time they are by the time they are facing some of these policies and all the rules that pertain to their business side, they might have lost so much before they come up. So it's better they understand all these decisions to make before they go into what it is that they are going into as a business. Thank you so much for that. Okay, so I'll be heading over to the next question for Chris, which is what role does financial reporting and governance play in ensuring business stability during unstable economy? Did you get that
All right.
question?
Yes, thank you. I think that's a very important question because in assessing business performance, and like I mentioned earlier, it's important that we rely on. So financial reporting is very, very key. It's not an area that we can compromise because if you have the wrong information, you're most likely going to take the wrong decision. So it's important that we get our financial reporting right because it helps us to think strategically. It helps us to plan ahead. It's not an area that we can compromise as a business. So if you're not getting the right level of support with respect to financial reporting within your company, I think it's something that you should deal with because the moment you are able to get data, accurate data, and on time, it helps you to take decision. Someone once said, if you identifying the problem is, getting it half solved, right? Because if you are not able to identify the fact that it becomes very, very challenging for you to solve it. And to a very large extent, it builds confidence. So when you're speaking about accurate information. And, in managing your cash flow and in driving business profitability, if you are able to understand how much your products are making. So, for example, you run a business, let's say a laundromat, and you're really, really worried about how much you should fix as your price for running that business. If you have data, accurate data that tells you how much you're putting in, how much your cost is, then you can play around your margins to be able to offer the right price, something that you would benefit from, and then also it would be something that is affordable for the customer. Some people run businesses today without even knowing if they are making a loss or not. But because money is coming in, they feel all is well. And over time, the business might go down because how best or at what point in time you are able to draw from what you have been sweating on. So it's important that accurate financial reporting is dealt with within your company. It's also important that it is timely so that you can make informed business decisions based on that. Like I said earlier, it supports strategic planning. So if you know that over time, your profit margins on this product is more than the profit margin on the other products, you would know where to channel your resources on. So you have limited resources, and then you want to invest more, you want to buy more goods. You have like 3 different products. If you have good product profitability analysis, it tells you where to push. And it's not really about the product that gives you the most revenue. The product that gives you the most revenue could actually be the least profitable product. So in dealing with an unstable economy where tomorrow you don't know what government policies might come up or regulations that might come up, and then affects your business. In dealing with situations around that, we need to ensure that financial reporting is dealt with. You have a good accountant that can give you your numbers, and you also need to be knowledgeable enough to interpret those numbers. So I would encourage you to go for basic courses that would help improve your understanding of the numbers, to the extent that, first of all, you can understand, you can appreciate, you can challenge the information that you have, and then also you can make informed decisions and on time. Thank you.
Thank you so much for that insight. I mean, it's very common among many business owners to literally just spend money as it comes, because they probably don't have a tool that helps them to track their income and profits and all of that. So it's a very, very, very bad method of business management. And if one continues like that, I'm not sure your business would survive any economic hardship. So it's very, very, very important to take records of your financial income, outcome, and all of those things. Thank you so much, Chris, for that insight. And this brings me to the next question for Oyekemi, which says, what are the best strategies for assessing financing during challenging economic times? Because most people don't even know this, they don't even know how it works, or they even know that some financing exists, some sort of financing exists. So what would you say is the best strategy for assessing these finances to help businesses survive in trying times?
Okay, I mean, I would say, is there a best strategy? Well, maybe we can say what is appropriate for the business that we are looking at, or the business that we are trying to grow and all that, because there's no one way to funding a business. It's either debt or it's equity, basically, but it's really how you now assess that fund that is the point of focus. But that being said, before I even go into how you can assess these funds, I think the first thing for me is really, as a business, what's your own financial health? How do you strengthen your financial health as a business? So my colleague has spoken well about reporting and the things you need to, focus on when it comes to financial reporting, and having a good, maybe a strong accountant or someone that helps you to put your numbers together. But most importantly, you understanding how to interpret those numbers. But the next question I'm going to ask is, you as the owner of the business, do you pay yourself salary, right? Is the business separate from you, or is it that everything in the business with respect to decision making, even decision making as low as an approval of a transaction of ₦1 million, depending on the size of the business, or even a few thousands, has to go through you? You have to be the one to approve all the payments before payment is done within the organization. Is it that you've not been able to develop a strong system that can even stand when you are not present in the office, or when you're not even present in the country? Do you have your own account, that's your personal account, and the business account all together? Or do you have separate accounts for yourself and then the business has its own accounts? Do you even treat the business as a separate entity from yourself? So all those things, in line, as well as what my colleague had mentioned, really helps a lot, or really matters a lot, because you need to be able to develop a strong standard in your business, right? So that tomorrow your business can stand even if you are not within the business, right? The next point I would now mention is, you can assess either debt or equity, right? So it depends on what you want to do. In a lot of instances, we see that there's mismatch of funds, because you have a long-term project and you are using a short-term fund to finance it. And then you know that interest rate has also gone up, so you are caught up in that web because of the mismatch and the type of funding approach that has been adopted. So that being said, I think the first thing is, what are you looking to achieve? And then what are the options that are available to you? I know in this part of the country, one major challenge that a lot of businesses have is even accessing these funds. But there are a couple of them. However, you as a business, because I mean, in the few years I've spent as a consultant and the experience I've had, a lot of businesses are not able to meet up with all the requirements. For instance, if you're looking at funds from a DFI, they also have risk or they have their own risk appetite, and they also have a control within their own business, or they have a control team in their own business that will say, okay, these are certain KYCs that needs to be met. But a lot of businesses are not, I don't want to use the word standardized, but they're not able to meet up with that. So I'll give an example. So for instance, you're running a project that has to do with mineral resources. But if you are doing that kind of project, you should know that an environmental impact assessment report will be required by DFI, because one way or the other, whatever you are doing is impacting the environment. So there needs to be a report, an assessment that is done to look at what you are doing, how it impacts the environment, what you are also doing to mitigate any negative impact on the environment. A lot of businesses, based on my own experience that I've seen, a lot of businesses don't have this requirement because they're like, oh, I mean, what's my size? Why do I need to do this? But for a DFI to these are things that you need to meet up with, right? So where I'm going to is that sometimes, because of the requirements, a lot of businesses on the medium to small scale side are not able to access some of these things. And then also, I mean, let me take a step backwards from that. The other point I wanted to mention is on grants, right? There are some government grants that you can explore, right? You can also look at fundings from maybe a private equity firm or fundings from a DFI, like I've mentioned. You can also negotiate. In fact, let's even leave all those big ones. Let's come home. With your suppliers, you can also negotiate terms with them. Depending on your type of business, you could even look at advance payments from your customers and then use that to, support production or support the time that you would use to maybe purchase the product, reprocess it, and all that. The issue with that, is that in a lot of instances, many small and mid-sized businesses divert the funds. So, for example, a fund is paid to produce a pack of, let's say, a bottled water, for instance, you water, or maybe sachet water now. You realize that, okay, a company has paid money in advance for you to be able to produce, but that money is used for something else. So we see instances like that. So where I'm going to is that a source of fund that you use is advance payments from your customers, but ensure that it is used for the purpose in which it is meant for. Yeah, okay, so I'm going to be stopping here. I hope that has been helpful and we've been able to identify ways we can, or strategies we can adopt to access funds.
Yes, that was helpful, especially the points where you said people always like approach long-term projects with a short-term fund. I mean, that's some common thing that I know I've come across, and it's not a good stand for businesses to take. Proper planning make an impactful change if documented well. So let's go to the final question for Chris, and that is, I know you've discussed about financial reporting, what role it plays, and all of those things. So I want you to share to people, the business owners here, the best, like how best they should approach this forecasting, budgeting, and all of those things, so that they are prepared earlier and in time for any unpredictable change or whatever it is that the economy throws at them. So,
Okay, thank you for the question. I think it's a very, very useful question, and it also links to what I spoke about earlier with respect to financial reporting. With data, you're able to make decisions. Now is, how are you comfortable with projections? So you're coming up with a budget that gives you comfort, some level of comfort as to what would come up later on. And in the course of executing that budget, you are also doing a forecast. A forecast is telling you where you're likely to land at any point in time. in a very, very unpredictable economy or environment, what you did 12 months ago, 6 months ago, may be very well outdated as of now. So we need to execute with an open mind. So if you want your budget or your forecast to remain relevant to you in decision making, then you need to be a bit flexible to ensure that you incorporate scenarios. So I'll give examples. So you've done your budget at the time when the exchange rate was, let's say, 700 naira to a dollar, right? And based on the fact that you have foreign denomination or foreign currencies as a major impact to your business, maybe you buy your goods in FX or you get revenues in FX. And there is a significant devaluation. We know that exchange rates today is, plus and minus somewhere around 16,000, 17,000 naira to a dollar. That is a significant change from what you earlier anticipated, right? So the point I'm making is when you do your budgeting and your forecasting, and especially in an economy that is highly unpredictable, you need to give room for flexibility. You need to build scenarios based on what you have seen in the past, so that you're asking yourself the question, if things get this worse, or if things get this bad, what would be my reaction to deal with such issue? If interest rates gets as high as X%, 40% per annum, what would be the impact on my business? If exchange rates, increase to this amount, to a dollar, how do I respond to it? What measures do I need to start taking, at this time? And maybe one of such measures would be for you to prioritize essential spending. So you're not back to the point I mentioned earlier, and I think to a very large extent, because this is really about business survival in these trying times. Most of my responses or most of the techniques you need to employ to deal with both improving your cash flow position, improving the profitability of your business, and also ensuring that you have a forecast that you can rely on. I mean, we can use tools to achieve this. It could be some of the tools like zeros, some of the tools that even Excel templates can help us achieve that. It still qualifies the importance of getting that knowledge. So oftentimes we may not be able to, run those numbers ourselves, but get someone that, can either use the tools or run those numbers on Excel. And the person is able to tell you different scenarios. So if this goes worse, or if this goes bad by this percentage, this is the impact it will have on our business. So that when things happen, you're not taken by surprise. And it's important that we focus on cash flow, projections, and also profitability, because you very well know that a business can be very profitable, but in a difficult cash flow position, that if you're not careful, you may not even be able to take care of essential expenses like your salaries. So it's important to keep an eye on how you expect your cash to come in and what you should do to improve your current cash flow position, right? Leveraging on technology actually helps to deal with a lot of, manual errors. We as a business, you need to determine the appropriate investments you need to make in terms of getting the right applications that would help facilitate this. So it's important that you decide on what applications to use considering the business that you operate, and getting the right persons to run these numbers and give you with the right level of information, or feed you with the right level of information to make the decisions. Because I mean, if you're blindsided with respect to what exactly is going on and what may happen later on, then you're very likely going to take the wrong decision. So another thing that I would also want to emphasize on is, as we operate in an unpredictable economy, it's important that we establish key performance indicators and monitor them regularly. So if you are not able to determine what is important to you as a business, right, what you should monitor, maybe the cash levels, maybe, what your revenues are looking like, different key performance indicators that you can establish considering the nature of your business. So please, it is important. My advice is determine what those key performance indicators are, right? And then regularly monitor them, because when things begin to go south, you pick them up. They are key performance indicators because they are the things that will impact you the most as a business. So you want to keep an eye on them. It still goes back to the points I mentioned about reporting. Reporting right, reporting timely, and then now to what we're discussing, which is on budgeting and forecasting, right? How are you able to preempt what may happen later on? And it is by having the right level of information and then, taking the right decisions or understanding the impact of what may come in future.
Thank you so much for that. So because of our time, we're almost hitting 2 o'clock because we promised to have this under 60 minutes. I'll just go ahead to ask the last question to the second speaker, which is the final question, which is, what advice would you give entrepreneurs on managing debt and maintaining liquidity in a tough economy?
Okay, thanks for that question. I think entrepreneurs just need to take a proactive approach and a strategic approach to managing debts. So you can break it into different buckets. What's your debt management strategy? What's your liquidity management strategy? Because, hey, liquidity is different from profitability, right? But I think in another section we can talk about that. And then you could also cut your costs as much as possible. But then again, I largely talk about optimizing costs rather than cost cutting, because before you cut your costs, you need to be able to assess which is a bad cost, which is a good cost, and all that. But focusing on debt management strategies, the first I would say is prioritize your debt repayment. So you need to focus, if you have maybe 5 different types of loans, focus on high paying interest loans, right? I mean, I'm not saying you shouldn't pay the ones with the low interest rate, so don't get me wrong, but as much as possible, ensure that you prioritize your payments. I expect that you would have a debt repayment schedule from the bank or whichever source you've gotten the loans from. So just make sure that your accountant or yourself, you track very well so that you don't miss out on payments, right? Another point is that you can negotiate for a longer term. So stakeholder relationship here matters too. You can negotiate for a longer term, or you could also renegotiate for favorable terms, right? When I say favorable terms, I mean terms that are not so stringent, even though they may be, but they may not be extremely stringent on your business. You may also, as much as possible, I mean, if you can avoid debt, avoid it. If you want to even take on debt, as much as possible, let it be for maybe capital intensive projects, not what you will use for your day-to-day running of the business. And then another thing I'd like to mention here is on cash. Cash is what is used to pay your debts, not revenue. So as much as possible, let's try to ensure that we manage our cash flows very well, which is the reason why I talked about liquidity strategies, and I also talked about cost management strategies. On the cost management strategies, you'll be looking at how to reduce your costs And then that was where I talked about if you're using a cost-cutting approach, before you cut costs, you need to decide which is a good cost, which is a bad cost. If it is a good cost, it's something that would help to improve efficiency and effectiveness in the organization at the end of the day. So like training your employees now, you won't categorize that as a bad cost. It's a good cost, because once your employees are more equipped and skilled, they'll be able to offer more valuable services to your clients, right? So at the end of the day, that cost will be beneficial to you as an organization. And then on the cost side too, try as much as possible to manage your spontaneous finance. So by spontaneous finance, I'm referring to your receivables and your payables. Your working capital cycle here matters. So if your receivables as your customers now, it takes about 5 days for them to pay you. And then your suppliers, as the people that give you raw materials, you need to pay them immediately, or it takes like 2 days to pay them. That's not a very good cycle, right? So it should be the other way around. So maybe you have a longer term or a longer tenure to pay your customers. That would help you to have collected money from your customers. You'd have sold your inventory, you'd have collected money from your customers. Another point I also mentioned here is on managing inventory, because all these things are what will bring cash for you. Try to understand the shelf life of your inventory. And then as much as possible, if you see that your product, maybe it has gotten very close to the shelf life, you can sell it and maybe give a discount so that you increase inflows, restock again, and then sell your products. So that way you're able to ensure steady inflow of funds into your business. I'm going to be stopping here, right? I hope the information provided thus far has been helpful. But I guess the last thing, sorry, the last thing again for your debt is about being flexible, because I've talked about your cash flows. You might try to do it one way. If it doesn't work that way, if you hit a roadblock, I don't think you should stop there. Think about an adaptable way or another way that can help you to either sell your products or achieve your objective. Thank you. Thanks,
All
Bimsola.
right. Yes, thank you so much for that. I mean, you've already shared that there are several ways you can achieve your objective as a business owner. So that's very important, being flexible. So yeah, we've come to the end of this session, and we would like to, if there's any question for anybody within this call, if you have any question, please let us know. But you can raise up your hand or indicate in the chat box if there are any questions. And like I said earlier, it's only one person that's indicated her business. And if there's any other business owner amongst us, you can as well indicate in the comment section what it is that you do so that every other person can see. So in the absence of, because it seems like I'm not seeing any hands raised up, I think that goes to show that everybody actually understood what was being shared, and they can see the best practices they can use to grow within this economy, and that's a great one. Thank you so much. So right now I'll just be inviting Kenny. It's a representative from 𝗕𝗿𝗁 to just give us a few insights on what 𝗕𝗿𝗁 is and how 𝗕𝗿𝗁 can help other businesses to stay afloat, to thrive in this current time. So Kenny, is Kenny on the call?
Thank you, Bimsola. Good afternoon,
Yes.
everyone. Good afternoon, Oyekemi. Good afternoon, Christopher. Thank you for extensively explaining the questions that were put to you. Yeah, so my name is Kenny Oyebola, and I am the business development executive for 𝗕𝗿𝗁. Today, I would like to address critical challenges faced by businesses, especially SMEs, which is delayed payments. And we all know that cash flow is. Yeah, so like I said, cash flow is the lifeblood of any business. And when it stops, the business tends to fail at any time. And this issue often arises when businesses, especially SMEs, are not structured as their large customers. May lead to losing track of receivables due to reliance on paper invoices instead of digital invoices. When at this age and time, a business is still issuing paper invoices to their customers, which might be lost in transit while taking to finance department, and it gets time for you to be paid, and they can't find your invoice because that business is still way back. Instead of you to be in 2024, the business is still back in 2000 and maybe 1998. Another thing is unexpected delays. An unexpected delay, which is not uncommon in businesses, right? So if the payments are delayed, cash flow will be disrupted, and the business will actually encounter challenges in reconciliation and resulting in inefficiencies and error. Because if you don't have informed decision, like the moderators have said, our guest has said, and you don't have data to back up your finances or your reconciliation, then you'd have mismatch and errors everywhere. So 𝗡𝘃𝗶𝗴 developed a solution to address these challenges I just mentioned, aforementioned, and we have developed a platform that gives businesses a solution to digitize their invoices, moving you from paper invoices to digital invoices. Yes, so digital invoices can be sent through our platform to a customer, and what it then gives that business is seamless tracking of receivables, hassle-free reconciliation, and automated follow-ups with customers, resulting in timely repayments. Also, in what we have developed, we have an in-app banking where which offers an integrated banking solution to pay and receive funds effortlessly from customers, even for individual needs. And the last one would be invoice discounting, right? Like we said earlier, payments depending on the SLAs and structures of an organization or businesses, payments from them might not be forthcoming. You as a customer, when you have actually fulfilled your obligations to them, and you have given them whatever you have to give them, the invoice, the delivery notes, and they can't pay you almost immediately because of the payment process. So this invoice discounting tackles delayed payment to SMEs. So SMEs can actually access liquidity quickly and meet pressing obligation, or they can take up more obligation without delays. Meaning, as a supplier or as a business who is obliged to meet the needs or support another larger business, have done the job, and you give them your invoice.
Seems Ken is no longer with us. I want to hope everybody can hear me right now. We are coming to the close of this session, this webinar session. So basically what Kenny was trying to say was breakdown of the offerings that we offer as 𝗡𝘃𝗶𝗴, and it how it addresses most of these challenges that business owners face. And like our speakers had said, Kenny was just touching on how, like, there are we have the tool, we have the feature that solves some of these problems that they have addressed in the course of this webinar. So thank you, Kenny, for that discussion. And to close this, we have a customer on board that would like to just say one or two things about our experience with 𝗡𝘃𝗶𝗴. Her name is 𝗡𝘃𝗀𝗃. So 𝗡𝘃𝗀𝗃, please confirm so that we can quickly wrap up and avoid, because we said this was going to be a 60-minute conversation, and since we've gone overboard, we just want to please listen to what 𝗡𝘃𝗀𝗃 says. 𝗡𝘃𝗀𝗃, please confirm you're on the call, because she was. 𝗡𝘃𝗀𝗃, please, thank you so much for honoring this. If you're saying anything, you're muted. You can go ahead to speak on what you initially wanted to say concerning your experience with 𝗡𝘃𝗶𝗴. Thank you so much, and you can make it brief, please, so that we can all go.
Thank you. Good afternoon, everyone. My name is Anna Dama. I'm sorry a call just pulled me out of the meeting. I've been here since the beginning of the call. Okay. I don't really have much to say, but I will say I really appreciate and I'm happy that I know what a company called 𝗵𝗵𝗁, and I'm happy to associate with them. It has really bring a very huge turning to my business. No, I met 𝗵𝗵𝗁 at the time that my business was on the verge of collapsing due to invoicing and some of the things Mr. Chris have mentioned and Miss Oyekemi, some of the things you have mentioned here today. I have learned a lot about, believe me honestly, it has been, I think, will I call it a mistake or an oversight that I don't really put mind or attention to. Believing my business has to evolve around me. The business can't do anything without me, like, you understand. But I thank God I met 𝗵𝗵𝗁, and I chartered the company, and ever since, my business has taken a very drastic great turn. I now have my stock always readily available, to the extent that I could confidently run an ad to tell people I can supply you in trucks, which I cannot do before I met 𝗵𝗵𝗁. So it's a great honor. If you ask me to continue talking about what I've gained from 𝗵𝗵𝗁, from availability of funds to this online invoicing, and to stock taking and things like that, it has been a very great one. And I'm so happy I'm part of 𝗵𝗵𝗁. That's all I can say. And that was why confidently when Gbemi said we should introduce our business, I was so confident to go.
Thank you so much. Thank you so much, Adama. We really appreciate it. In fact, this is a very good testimony for every other person that is yet to come on board to see the benefits and enjoy the benefits that 𝗵𝗵𝗁 has to offer. So for the sake of our time, we're way past the time we already allocated for this. Thanks to everybody that came on board. And if there's any other need or any other question, you can write us a mail, because some of us have to jump on something else. For sake of time, we will be closing in this session. Thank you, Oyekemi, for honoring this invitation. Thank you, Christopher. It was a really insightful session. And for every other person, the resource from this webinar will be shared via our mails. Thank you all. Do have a lovely week ahead. Thanks, guys. See you all on our next webinar. I hope you all are there to witness another changing and another insightful session. Thank you so much once again, Chris. Thank you so much once again.
Thank you. Bye, everyone.
All right. Bye,
Thank
everyone.
you. Have a great day, everyone.
Yeah.
Bye.
Bye.